Investing in a marijuana company, here are the fundamentals. There is a national push from both large VC firms and savvy businessmen to invest in marijuana companies. Expectedly, the federal legality of the plant has provided a series of challenging regulatory issues for these parties and has necessitated greater legal precautions. Nevertheless, before understanding the idiosyncratic difficulties posed by marijuana's federal prohibition, it is critical to gain a basic understanding of how startups may, as a general matter, raise capital. So let's cover the basics. State regulators and the SEC have worked together to introduce a number of newer exemption options for businesses that are raising capital. Again, not specifically geared towards the marijuana sector. These alternative options simplify the process of obtaining capital and encourage investors to support businesses through improved methods of financing. So here's the first one, the Accredited Investor Crowdfunding Rule, Rule 506C. Rule 506C offerings can only be made to accredited investors, and issuers must take steps to verify the status of the investor. This includes reviewing the investor's bank account, tax return, and other financial information to confirm that the investor meets the income or net worth requirements for the offer. Again, one could easily imagine the additional problems marijuana companies have face, given their lack of access to traditional banking structures. Can you really invest in marijuana when federal bodies refuse to offer a robust regulatory system for the industry? It's a difficult question. Next, Rule 504 amended. The desire to invest in marijuana is fundamentally stymied by its federal legality and Rule 504 of Regulation D, which was recently amended and serves to protect small businesses as qualifying issuers are exempt from SEC registration. Additionally, Rule 504 offerings are now capped at $5 million, significantly surpassing the former cap of $1 million, and offerings can be made to non-accredited investors. Next, federal intrastate exemptions, Rule 147 and 147A revised. In the 1970s, Rule 147 was adopted, allowing for intrastate solicitation. However, issuers were required to conduct business in the state where the offering occurred and had to meet several tests to be considered operational in a given state. In an effort to better accommodate modern business practices, i.e. use of the internet, the SEC amended Rule 147, changing the methods by which a company is considered operational in a given state. The new factors to be considered include where a company derives at least 80% of its revenue, and 2, where 80% of its assets are located. 3, and perhaps most interestingly, where most of its employees are located. This is a beneficial provision for intrastate crowdfunding, and one that should not be taken lightly. Next, let's consider Regulation A+. The Regulation A+ exemption has 2 layers of rules. The first layer provides that the capital raised must be less than $20 million in a 1-year period. The second layer provides that offerings must be less than $50 million. Issuers do not have to register with the SEC, but they must get the SEC to approve and sign off on their statements of offerings before making any sales. Offering statements include information about the issuer, the offering, and the issuer's ability and eligibility to make the offering. How precisely will this regulation affect companies looking to invest in marijuana companies? Unfortunately, the market is not quite big enough to entertain enough companies with this type of capital, but it will certainly be an interesting development in the future. Next, let's move into Washington. House Bill 1593. HB 1593 was proposed and passed with the intention of streamlining the process of allowing companies in Washington to utilize the state's equity crowdfunding bill. Accredited and non-accredited investors are allowed to invest up to a combined $1 million during any 1-year period. The selling of any equity, including convertible equity and convertible debt, is allowed. Lastly, the disclosure of executive employee salaries changes from a quarterly report to annually. HB 1593 removes some restrictions that were enforced in the previous crowdfunding system. Traditionally, small businesses and startups had difficulty raising capital due to limited options. With the SEC modernizing available fundraising options, small businesses are better supported and investors are better motivated to invest. So you're investing in marijuana. Here's where we're headed. The very notion of robust federal regulatory systems for investment bodies is in direct conflict with the federal government's edict prohibiting cannabis national legality. It is just a difficult fact that while an increasing number of states are pushing to legalize the plant, the final hurdle of national cannabis reform will only ultimately solve these regulatory investment issues. I hope you enjoyed this video. There's a lot in here, and we're going to have future videos going deeper into some of the rules and regulations that we had just discussed. I look forward to you joining us in the future on your path to cannabis success and growing the industry along with us. Until next time.